Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 17th, 2023. We'll start with the sniper trade of the day. This is NVIDIA on 3 minutes. So this was the dominant semiconductor out of the three that we follow. So we were ready to trade that one. And here's where it closed last Friday. There was no gap. It just started taking straight off. So I put a standard risk box on it from the open. And it gave me an entry, 1 MMRB, minimum manageable risk box, off the bottom. And then in the first 3-minute bar, it was already at +2. So that was a nice way to start the week. It ended up getting almost 4R by the peak, and then rolled over, and I took the exit to bank 2. I waited for the second entry. I waited for the PSAR to catch up. I waited for the R10 to find support and take off. So I bought the COTA 2 re-entry. When it gave me the R10 continuation north of the dragon, that was easy. And standard risk box in the usual way. So standard risk. That gave me a nice 1-2 exit after the R10 peaked and had a large sell-off, and at the 2-bar low, I just went ahead and took that at the edge of the dragon. And I want you to notice the dragon also rolling over. This is where the dragon rolls over. This is where the R10 rolls over. So it's not unusual to see that the dragon lags the R10 by about 3 bars. I strongly considered this short here because we'd already seen 1 leg, 2 legs, and had like 2 risk boxes on the sell-off. So I thought hard about this. You can see the PSAR flip has already occurred. So if you were to take that short, that would be a reasonable entry, and you might expect it to come back and test this consolidation area here, and if it breaks through there, then you think that it might come all the way down and erase the gains of the day. So that's not an unreasonable position. I was corresponding with some folks today earlier. My default position is not to take the trade. Like, I don't take shortcuts on the entries and the setup criteria. But even when all the screens and filters and everything hits, my default position's not to take it. I still got to be, I want to be pulled kicking and screaming into the trade. Now, in this case, I began to regret it immediately. I thought about entering the second time here, when the R10, which had been in summer this whole way up, when this rolled over that time, this became fall, and this is where it became winter. And so I thought hard about that as an entry. If you take that entry, your risk box would be up here by the PSAR, and that's a reasonable entry. You've now had a significant sell-off. It's erased the second leg up, and so if this collapses, you're back into kind of free fall. So I thought hard about that one. I didn't take the first one. I didn't take the second one. If you had taken the first one, I think the second one is too early to take a second position, but either one of those positions is justified. The second position would not have lost money because by the time you get this move and then you get a 1, 2, 3 exit, you end up exiting right about here. And so you could have made that little wedge. And then the first position would have been a good trade. That's the trade not taken. All right, but I do take this one. I have a long side bias on this. And what would we call this pattern? After a nice run up, a pullback, and a higher low. Yeah, we would call that a caught at 2. And we get the entry on the R10 crossing the PSAR. Price is north of the dragon. We've got a standard risk box. Just like downtown, that thing works. Now I want you to notice that price is stalling, but the R10 goes from spring, then that little gain is enough to turn it into summer, and it holds support at the edge of the dragon, and that thing is starting to move up in a summer type of a move. So that feels really good. By this time, your stop, which was here, needs to be at least like here so that you can lock in. At a minimum, you can lock in that little wedge of no lose plus dinner for 2. It becomes interesting if it can take out the peak of the R10 and that PSAR flip. So this is still just tactical trade in here. It's not until it gets above that price level that this really becomes interesting. Okay. R10 starts to roll over, fails pretty quickly into the PSAR, and I'm happy to take about half an hour. I notice that it was not able to make a new high, so this is starting to feel like maybe that run is done. And certainly I can get short here. Excuse me. If I decided to get short here, what would I call that entry short? Collapsing dragon. Yeah. You might front run that by using the bottom of the dragon. That's the other one that we would tolerate. Either one of those we would consider a collapsing dragon. To me, the taking it at the bend of the dragon is a little more aggressive. But now I have the R10 crossing the dragon. So this space between the bottom of the dragon, which is rolled over, and the collapsing dragon, this whole space inside here we think of as the pocket. So that is any entry inside of this space that's shaded, any entry in here we think of that as a pocket trade, and that is front running the collapsing dragon. These fail a little more often. In other words, this This move might just hold and then resume, in which case you'd still have another kata 2. But when they do fail, you end up getting about an extra half of an R, maybe even an R, by taking the more aggressive entry. So I really see on this potential return to yesterday's close, I see this region in here that's north of the dragon, the bend of the dragon, and between, the southern skin of the dragon and that mark, this whole area, one region for a pocket short. The second point would be the break of the the dragon belly, and then the third one, the break of the collapsing dragon. Okay, so there's three points in which I could consider getting short if I want to get short. It immediately reverses. Now, what would I call this entry? Kata 2. Because we have the higher low is consistently in play. Now, where I'm interested in now is the top of this R10 again. It has to get above that price level for this to go. Last time it only got us to here. We're about re-entering at that same price level. So this little region in here I think of as the tactical trade. I'm speculating that it might take off and go through there. But if it doesn't, the longer it takes just to monkey around in here, the sooner I want to get out of this, because I don't believe in this trade. So if this is going to work, it should work right away. I would not be opposed to the idea of your standard risk box being here, obviously. But then I notice the belly of the R10 is right here. So I might just do that and then use that as my trigger to get out and limit myself to a half an R by executing at that level instead of at this level. That's acceptable. Because this range of opportunity here in this tactical space is so small that maybe I only want to take that much risk instead of taking a full R risk against slightly less than 1 R to a test of the previous R10. Your call. Wouldn't be offended by that. Grinding, grinding, grinding. I take the grind, and then when so it gets some grind, it turns to summer here, but it can't really break higher than that previous, and then it crosses back over the PSAR, through the dragon at the PSAR. So I just feel like, hey, I'm willing to take that. I took that piece here, and now I'm willing to take that piece. And we got this rolling over, and it's getting into the afternoon. So maybe that's just the kind of a day it is. And that's just the kind of day it was. So this is McDonald's, and we highlighted McDonald's as an opportunity over the weekend because it had been smashed so hard. So this is another one where, prepared to trade it. And here's the size of the MMRB. And there was no gap. And this thing just started taking off. It essentially moved 2 MMRBs off the bottom. And I just said, you know what? I'm just going to take it. And I'm just going to use 2. I'm going to use the low of the day as my risk box. So I'm using like half the position size because I'm using double the MMRB. Now there's still 4 more boxes like that available to the upside, so you don't even get a range stat until it moves up to here. Why? Because the R10, we take the range stat and divide it into 10 equal segments, so 1 MMRB is 1/10 of the range stat, which is the maximum reasonable intraday move. Because I let it move 2 off the low of the day, that still means that there's 8 reasonably available to the upside, and so that result 8 to 2 is 4 to 1. So there's still a theoretical 2 to 1 opportunity for me, so I don't mind that. So this is very much like a frog entry. So in that first, this looks an awful lot like the NVIDIA trade, because that thing in the first 3 minutes, that blue box, moved all the way to here, ran up and came down, and I was willing to just take that there. So here's my risk. So I get about, that's about +2. Check or hold. Now it would have been possible to let it move 2 off the bottom and then use just 1R as the risk box, and I could have had twice the position size. But I just felt like it was reasonable to just take what I could get. So that's +2. Check or hold. Now notice this gave us kind of the same pattern as the NVIDIA trade, in that it held support high, and then I bought the crossing of the R10 crossing the dragon, so it's already reversed, held support at the PSAR. Then I put my, now I'm using the standard 1 risk box, whereas on this one I was using 2, because now we're this far into the day. It gets interesting if it can get above this peak of the RL10. So this space above my entry is the tactical space. And all I'm going to try to do in the tactical space is get my risk above that line so that I can lock in that little bit of gain. It gets interesting if it can get above this price level, then it has a chance to go. Check or hold. It just grinds for about 30 minutes and doesn't really do anything. So we take, when that fails the second time down into the PSAR, I just take it, because it failed twice at the previous place that it failed. So I'm happy just to take that little fraction. And then it doesn't fail further. Like this doesn't come down here. It resumes. So when it crosses the PSAR, I re-enter with the standard risk box. Just following instructions. And that's not bad. That one grinds out a couple R on just a very orderly progression. And part of the reason is that statistically we know that is a minimum manageable risk box. And it got us into kind of a nice quiet trend trade. I take the Kata 2 again, because why not? Keep getting these higher lows. I like it. Standard risk. All it has to do is get above this peak. It's already starting to get interesting. So there may be one more leg left in this. It grinds for about another R. I don't take the short, and there was room in there in the afternoon trade, but it was already near. It was already near 3, and I was content with that trade. Now we talked about this one over the weekend, and we saw it on Friday again. This is Baxter International, and this was an Uber Godzilla, right? This was a raging Godzilla, and here's where it opened, or here's where it closed. It opened here, ran all the way up, ran down through the previous day's collapsing dragons. So I took the entry here. Collapsing dragon. And then there's your standard risk box in Baxter. And that one essentially scratched right away. Actually, not quite right away. It went this far and then monkeyed around. It kept giving me higher lows. So I exited here for a scratch. It then rolled over, and this was a lower high. So I just put the same trade on. Short. Smashed it. Then at the bottom of that stack, you get the first weakening here, second weakening here, third time, 1, 2, 3 exit. Just take that. Here's 1 unit of risk. You got about +2 on that trade. Check or hold. This is a Godzilla, so I play it as an SSC. Scratch. Caught a 2 re-entry. And this is about as nice and symmetrical as you could ask for. Now, what I want you to notice is that the price failure here happened in about this much time. From 9:30 to 11:30, so that's about 2 hours. The recovery from here, from the low of the day, back up to the previous price level, lasted from 11:30 until 3, so it took about 4 hours, whereas this took about, what did we say, 2 hours. So this is the argument for why the collapsing dragon is preferred, because when it collapses, both of those are, that's a collapsing dragon, this is a collapsing dragon. When that thing fails, it fails fast. And when this thing starts working, it climbs up the stairs and then falls out the window. So if there was more time, I wouldn't be surprised to see it slowly grind up and then big time collapse down. So in the battle of preferences between collapsing dragons and SSCs, I'm always going to vote for collapsing dragons. And I missed that one on the short side. But again, it was after 3, and I don't trade this one a lot. So that was just an opportunity cost. If you use standard risk box, That was probably an R. So those are 3 sniper trades of the day for you to look at. Here is the S&P on the 30 minutes. So this is the tactical view. That's SPY on 30 minutes. That's our hybrid between intraday and swing trading. And this was today's move. Kind of a quiet move. It moved up, settled down, and closed in the bottom quarter. But it was really a low range day. Made a new 10-day high. Held support at Friday's. So this feels like a consolidation and failure to fail. So we just inched into in that move there from here up to here. We moved from bear into sideways, and this just felt like it was consolidating, and the SPY was solid. Did not fail, did not give back. Good defense today. Now, if we move out to the daily bars, still SPY. Now we're looking at dailies. Now here's our 1-day range, the yellow box. Our 5-day range is the shaded blue. The blue clear box is the 10-day frame. And then here's our 30-day frame with a 30-day high, 30-day low. Here's our 10-day high made today and 10-day low back here. 5-day low, 5-day high. So this is really all pretty good. There was the PSAR flip. Here is the price level we talked about testing. First one around 402. We're very close to that. And here's the second one up here at 406. So we are within striking distance of both of those tests. If it breaks through 406, we got a fighting chance for this to go. Otherwise, this could be, if that fails that test, this thing starts rolling back. It can come back to the belly of the dragon, the belly of the RL10. This is where we start picking up the collapsing dragon patterns on the short side. So if you have gains invested in this move here, you got to figure out, what do I do if I start seeing weakness like this? Where am I going to preserve? A way to do that is simply just to take that distance from here to here and divide that by 3 and risk 1 in order to protect 2 if you got long in here. So that would argue for a stop around 394. You could that's about like the 2-bar low. I could not justify, if I'm a swing trader, I couldn't justify risking more than that. Like, I'd be willing to give it this much room, but I'm not going to let it get below 394 because I want to preserve the hard gains that we won from over here. And notice that it took 7 or 8 days to make that move. It could lose that much in 2 days and return to the bear. So I want to respect that. And I am encouraged by the sign of we have just moved into the summer on MACD histogram, so that feels good. On the 150-day look back, now we're taking a much wider look. There's our goals up there around 430. And we're liking this Kata 2 kind of action here, and you can see that's where the test is in this little region right here. So if this fails, it comes back to here. If it fails below there, look out below. But if it can get through here, then we're looking at those price levels to the upside. So not impossible. This is starting to heal. We're at about the 60-yard line. If that's 100 and if this is 0, then we're about at the 60-yard line and slowly gaining traction and heading north. Quick look at our sectors for the day. From a distance, we're going to notice the S&P was down a fraction. You had the Russell and the Tech in the U.S. were both slightly better. That's good. That's actually a vote of confidence. We have, excuse me, emerging markets and treasuries were off 0.5%, and then diamonds were the worst at 1.13. So that feels like conservative money leaving the diamonds, going to small caps and tech. And is this the sign of tech beginning to lead? We don't know, obviously. In our semiconductors, notice there's NVIDIA was much better than the two worst performers in our stack of Intel and Texas Instruments. So that's a really strong vote in favor of NVIDIA, which was up 4 3/4 today. So let's keep that one in mind. In the metals, there was a mixed bag. You had Alcoa at +0.5. You had Cliff right at flat, and you had U.S. Steel down 0.85. So there's a real differentiation in our metals. So in the metals and the semis, I'm looking to exploit Alcoa and NVIDIA. Tesla had a promising day, up 7%. So that's sort of the resurgence of the U.S. and tech, and the recovery in Tesla may be continuing. Meanwhile, Ethereum up another 7%, making me look like a genius here. But that's part of a relief rally in the cryptos. There's Bitcoin at +10, Squarespace, Ethereum, Coinbase, Robinhood, all of your financial disruptors doing pretty well. When we look at the swing trade portfolio real quick here. This was Cliff today. We're still long from here. We had our stop raised up to here. Today's price action did nothing to disparage that, although it did gap up and then sold off and closed weekly. I'm actually going to raise that stop a little bit, I think, to here. I want to, because it couldn't really continue, that feels almost like it's rolling over. I want to gain that little extra piece, so my stop will be at 2040. Devon Energy, we exited that one on Thursday, or I'm sorry, on Friday, when that rolled over and broke through. It stabilized Friday, and then today, a little gap up and closed, so there's nothing here. So I'm just stalking it, no live position. So this still feels like a pretty good exit that preserved the move from here. On this much risk, we were able to gain 1, 2, 3, 4, almost 5R. So happy with that one. We'll just keep letting that thing set up inside that channel. See what happens. Ethereum, our stop was here. I'm going to move that up to 775. There was a nice gap on that, but it really didn't trade out of that range. So I want to lock in that 775 on a really nice entry from about 470. So that's about a 75% gain. And I'm noticing 1, 2, 3, 4 legs up. So feels almost like some nosebleed. Mexico, our stop was at a 2 day low back here. It gave back a little bit today and then held. I'm still going to raise that up a little bit. Because it couldn't break higher, I'm going to move up to about a 2 bar low to 56.10. So just lock it in a little more. Brazil was a re-entry today. So Friday we had a nice swing from here, and then there was a harsh sell-off which kicked us out, and then it stabilized all day, and then today there was a little gap and a go, and I like that. That's like a little quiet kata too. So I'm going to take this wrist box. This outer box was the daily range, so that was the low of the day right here. So I'm basically got two daily ranges as a risk. So I'm just going to take that much risk. Okay. So we're back in Brazil. Real estate, residential. We exited on Friday in the morning. Nothing today. Couldn't break out, so I'm just stalking it. No position. McDonald's. This was part of the core and turbo. I showed you that turbo move where it just kept blowing up through here. So I kept 20% from the entry here, and that thing really closed well. I like that, so I'm going to put a stop at 273 at the PSAR and try to lock in that much gain for that much risk. And I'm looking to add a position tomorrow on the swing. If it gets above that, I'll look to add a second position. Marijuana. This was an entry today, or I'm sorry, Friday, and then today just ran up. If it breaks above this price level, I think I'm going to add a second position. I like this as a recovery from a really horrible slide. If you want to see what I mean, that's the 3 day chart. 3 day bars. This thing has just been getting smashed, but then it's done this, and that feels like failure to fail. So I'm hoping to see that thing get up to 13, and so that's a genuine value play right there. Clean energy. Let's see. Let's go back to this one. So we are still in that one from an entry back here on this much risk. This was our stop going into today. All it did really today was just stall at the top of the hill. I like that stop right there. We'll just keep that in place. If it breaks above here, I will add a second position. Treasuries, we have no position on that one. We got kicked out of that one on Friday when it broke. So we were long from about 100, exited at 107. This thing stalled and started to sell off a little bit today. So I'm stalking it. No position yet. Tesla was an entry today on the gap and go. And I'm using a wide stop on this one. So from 122 to 110. So that's a $12 stop that I'm using. And I'm keying that back to this price level. I just wanted a swing position on this thing. And we got it. I think I'm going to put a stop like right here. I want to lock in that little bit. I'm going to move up to like 127, which from 131, that's about a $4 risk. If that gains again tomorrow, I'm going to turbo the entry and then try to keep another piece as a swing. And last one, U.S. Steel. So that exited us on Friday from that nice move. It closed well on Friday, but today just kind of sold off and mucked around. That feels like weakness. Not enough to get short on yet, but that will start off as an intraday trade. This is where I would be interested in getting short around 26.50. There's just too much on my plate right now to plan on getting short. That would be an intraday short only, but the market feels like it's healing. So I have no plans to be short that one as a swing. My brother asked me to look at Coinbase real quick. On the 9-day. Yeah. He was able to get this turning motion here on that doji. And this thing's done nothing but run up for 10 days from, about 36 to 54. That's plus 18 on 36. That's a 50% gain. Remember, that's the same move that gave Ethereum 75%. So this is a broad-based recovery after the disaster of SBF and FTX and all that. So this is that relief rally. I don't know how much more is in there, but that's a gain worth preserving. So we want to respect the gift. All right, let's look at the traders today. Agnieszka, our intern, is doing nice work here. She saw the double bottom. She saw the dragon turning. Sees the RL30 turn. This is an owl entry. She gets long, standard risk box. There's one and a half. She plays the rollover and only gives back a fraction for 1.4. Sees there was a kata 2 developing, but when this failed a couple times at the edge of the dragon, she tried it, didn't work, stopped in reverse, didn't work. This is where you got to re-enter here when that breaks above the R10, or here above that R10. That extra waiting that for confirmation made us miss that move, but still we come in at 0.3 and got paid to learn a little bit today. This is the Kiwi against the Swiss. She tries the collapsing dragon. I think you waited too long on that one. You took a full R. When that thing doesn't work right away, you could get out at a 1, 2, 3 here, or with a slight loss at the edge of the dragon, or at the peace R. Any one of those is an improvement. This is a good stop and reverse, which gets played plus 2. And I like the fact that you saw the doji and took a 1 bar low. We could be short when that comes through here, or when it hits that. That's a good short. That's a good exit to scratch. I like this one. I like the tight stop. Now I want you long here. And then this is a scratch instead of minus 0.5. And then when it breaks above the R10, you can be long here instead of here. And then instead of 0.3, that would be 1.3. And then that would make you almost 2R for the day instead of 0.5. Still, pretty good work in there. And I like you're tightening up your give backs. Nolan, there's the OR3. He does not take the short. He waits for the rebound. I think of that as a kata 2. Gets paid, then stays out of the chop because he was looking at the movers. So that's 1.9. +2. Nice job. Tesla way over trading. Um, yeah, a slight improvement. There's your OR3. So a slight improvement on the entry. So waiting for this little wiggle, that's fine. Um, the only improvement there might have been a 1 bar low to lock in that gain, but you still got the edge of the dragon. That's pretty good. Elected not to take the short until it crossed the VWAP. Then that was a scratch. Um, looks like a stop and reverse and a loss, and then a re-entry long again. And so that all netted out to 0. Quick scratch, quick win, and a bunch of scratches. Yeah, the only opportunity may have been just a little bit earlier, but I think you got about what was available. There just didn't seem to be much available in Tesla except for that early move. Maybe this was where the overtrading occurred, because now we didn't really get the expectancy. Anytime we're north of that dragon here and we're above the VWAP, we want to kind of be long. So we should maybe we could do a little better inside there. FSLR, this is solar. The OR3, that's reasonable. Gets a fraction. That was a short opportunity. Waiting for confirmation makes that a loss instead of a scratch. Waiting for the PSAR. Now on this one, I think I'd rather have you out right there or crossing the VWAP instead of down here. And then this is a screaming short because you have lower highs and crossing the VWAP on the PSAR break, and you make it all back here. And then this is a screaming short because you're still below the VWAP and you've got consistently lower highs. So let's respect the trends and the VWAP. Finally, on NVIDIA, brings home one. You saw the other turbo trade. So there was in that OR3, because I was on it because that was one of my top 3 high priority trades. So I was able to get the move off the bottom. This is the one I want you to get. When you get this move and it holds at the edge of the dragon, we can get that here instead of here. That's a good scratch. I did not take that short. That's the one I regretted, but I did get that one, and so did you, and I like that one. That's pretty good. If that was not one of your top 3, then I can understand not getting it on the first shot. And this is the one that I want you to look at. That's the one we should be able to get. All right, let's daily report. Dashboard 1, we're in sideways quiet. That's a good thing. That's a plus. Still pretty good strength in all the time frames, minus the 270 longest term. We're above the 200-day moving average. The risk Z is quiet and risk on and shaping up. Tesla and McDonald's are now part of the long side plays. Still weakness in Pfizer, United Health, Johnson & Johnson. Lots of dojis today. That's a good thing for the long side. That's a small intraday range. Only a handful of auto framers in Johnson & Johnson on the weak side, Pfizer on the weak side, United Health on the weak side. Notice and Pfizer's the weakest of them. And there was a little bit of strength in Chevron and Energy and in Apple. Johnson & Johnson is also a 5-day down. We'll notice that. In the ETFs, a lot more strength than in the Dow. Remember, the Dow was the weakest U.S. So Euroasia, Japan has strength. Strength in European 350, in oil, in tech, that's a good thing, and in oil exploration. Nothing on the auto framer, as most things are near their 10-day high. Weaknesses in what had been winners: diamonds, silver, treasuries, finance and industrials, and metals and mining. Those were all the winners over the last couple weeks, and this is a shift subtly towards a little bit of tech leadership. Oh, look at these squeezes. The top 3 squeezes are all the U.S. indexes: small cap, spiders, and mid caps. That tells you how tightly compressed that, and that's a very good sign. When you don't see sell-offs in the sideways quiet, that's slowly healing. We like that. That's a good thing. Tech and energy may be taking over for finance and industrials as part of that squeeze. So I like that. Couple Godzillas still. Baxter, you saw me trade that one today, LHX. Then in our tactical symbol set, it's still VIX and Rivian. I like the double greens in all of these, so Morgan Stanley and EMR, ATVI, Kimberly-Clark. Travelers is interesting. Look at the size of that one-day move. And Goldman Sachs, also a big old one-day move. So in the finance sector, those two are in play and worth looking at. Travelers was the biggest statistical mover today. Goldman was in second place. So those two are in play. You can see in the multi-time frame NDX summary the weakness here in Pfizer and Johnson & Johnson, Goldman Sachs, Cisco, but then the big strength in here. Now, when there's that much strength on the 2-day and 10-day, you keep going to the left and you see on the 30-day look back, strength is in Bitcoin, Ethereum, Squarespace. So those financial disruptors are making a play. Tech leadership and oil. There's more tech, oil. Yep. And I think, let's see, we'll take a look at the last little bit. The frog value, finding the ones with great trading value. Tesla, Clean Energy, Apple, Alcoa, Boeing, Disney, Microsoft, Brazil, Metals Mining, and DuPont. Alcoa for me, Microsoft in Brazil, Tesla and Clean Energy. Lots of good choices in there. These are ones that have large average ranges and reasonably strong frog quality numbers for consistency. The combination of both of those is what creates trading value. Okay? So this is our standard tactical set. And that's my areas to concentrate on Finding the movers. Big, consistent movers. All right, that's everything we got for today. We'll get this published and processed, and we'll be ready to get these guys tomorrow.